Hello and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Tuesday 17th of April. We've got some interesting moves on markets. We've got the dollar weakness that is re-emerging in the last couple of days. We've seen that dollar index just rolling over again, and that comes despite the fact we've got treasury yields which are pushing higher again. Look at that 10-year higher and the 2-year at multi-year highs now. But look at this. The spread, 45 basis points. That is continuing to reflect the flattening yield curve in the States, and that certainly isn't a dollar positive. And it certainly looks as though the market is resuming its sort of dollar downside move as risk appetite continues to improve. We've seen the VIX volatility, which is dropping back ever more. We've seen equity markets which are finding support. Interesting that the DAX once more, as the equity markets rally in Europe, the DAX is outperforming the FTSE 100. S&P 500, look at this. S&P 500 is now breaking out, forming a head and shoulders reversal. That move above, close above 26.75 yesterday signals that that is sort of forming this base pattern, which certainly should signal further recovery, probably back towards that March high again. It's around about 120 ticks, is it? 2675, measured from 2555. Yeah, about 120 ticks higher. So what's that? Around 2000. Yeah, around 28. Yeah, so not too far off that March high is the implied rally target. If we continue to see that rebound on the S&P 500. Now, oil price has just dropped back a touch, but remains pretty elevated. Actually, a bit supported today. A little bit of a correction move, but you can still see this big uptrend intact. And the fact is that little corrective moves continue to be bought into. You could see a bit of a slip back to maybe 65 area, 64. But ultimately that would probably be your next chance to buy on WTI. But yes, generally speaking, we're seeing this risk positive move coming in, and the G4 currencies, euro, sterling and yen, strengthening against the dollar. Interesting that we've had that Chinese data out this morning. The economic growth was better than expected, 6.8%. But what we did see was industrial production down worse than expected, 6%. On the flip side of that, you saw retail sales up more than expected. So it sort of reflects the rebalancing of the Chinese economy that is continuing to progress. Now, industrial production worse than expected, so that doesn't bode especially well for the commodity currencies today, hence why we're seeing a slight sort of underperformance of the Aussie and the Kiwi. But yeah, the market is still certainly set up for risk recovery in due course. Now we've got UK data because we've got the sterling dollar breaking out this morning to multi-year highs. Now I'll show you that on the charts in a bit, but that comes ahead of the UK wage growth. Unemployment expected to stick at 4.3%, but the wage growth, average weekly earnings ex bonus, expected to improve to 2.8%. So this sort of continues to paint a picture that the Bank of England will be able to hike rates in May, and certainly the run higher on sterling reflects that in recent days. We've also got German ZEW. Now, German ZEW data in the Eurozone has been deteriorating. Let me see if I can get this chart through. Has been deteriorating, and it's expected the German ZEW to fall to negative for the first time since July 2016. So that would again sort of reflect that deterioration. Expected to go to -1 now this morning. And this afternoon then we've got the building permits and housing starts basically around the similar levels from last month. Industrial production is 0.4% positive on the month. Capacity utilization up to 77.9 is the expectation there. So my chart of the day is Euro CAD. Now what we have seen in Euro CAD is the loonie, which has been strengthening over recent weeks, and that broke down below that 57.60 support to complete a top pattern. That actually gives you an implied target of 54 figure. And again, as I said previously, that sort of brings you back to around about this breakout, this old key breakout around 53.70. Now what we have seen is trending lower highs, lower lows, downtrends confirmed on the RSI. MACD lines falling away. The stochastics have ticked higher a touch, so that is a little bit of a concern possibly to watch out for. But at the moment it looks as though rallies are still being sold into. These candles are not especially positive, and I would say yesterday's candle reflects a bit of a sort of a nervous market in terms of rallying, and I would say that you're likely to see the next lower high probably between sort of this sort of level 56 up towards 57.40. So I would say that we'd be looking out for the next lower high within that, which would give you another little chance to sell within this downtrend phase, which is a corrective phase, I might add, within the longer term uptrend, and I still see that there is further legs to run in this move to the downside. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.